Why has China done this?
Yeah, thank you for inviting me this morning. So the short answer is that China really needs to slow the appreciation in the yuan. The Chinese currency just had the best quarter in 12 years in the last quarter, and it just jumped to the strongest level in 2 years. So the pace of the events is very, very quick, and the yuan is having very good fundamentals. So it's supported by a really good economic recovery, and yuan is having a really wide interest rate premium over the yields in the U.S. So that means China is seeing a lot of capital inflows to support the currency. So that's why China is trying to ensure banks no longer set really weak fixings. So that's a pretty strong signal from the PBOC to slow the yuan's advance.
So is this just a signal, or is it more substantive than that?
Yes, to be honest, I'd say it's a very strong signal. But in terms of how effective it can be in practice, it's really hard to say. I think the fair way to say is it's going to be quite limited because, after yesterday, after the move was made, onshore yuan only weakened by 0.1% by the end of the day. So actually, banks are no longer setting really, really weak fixings because of the weakness in the dollar and the strength in the yuan already. So this is more of a signal than a really practical move to slow the advance. Yeah.
So how effective is this going to be when it comes to reining in appreciation? And if it doesn't work, what other measures are there?
Yeah, just as I said, I think in practice, it really depends on how traders take the move. It's a strong signal. It depends on how they're going to react to the move. But more likely, it's not going to lead to very significant weakness in the currency. But PBOC still has many other measures it can use in its toolkit. The PBOC can set really weak fixings for a few days. That's another strong signal it can use. PBOC did set some really weak fixings before, but they were not very weak. They were not as that weak than expected. So the PBOC can still make that signal stronger. And another really intense move they can take is use direct intervention. That means selling the yuan in the spot market. That would be the strongest measure it can take. But it's less likely because PBOC is trying to make the yuan more market-oriented. And other measures include, you can have the PBOC governor to come out and issue verbal warnings. Tell the traders that the yuan is too strong right now, and it can also loosen up capital controls. It has done that a little bit already, but it can take more forceful measures to allow capital to flow out of China.